The market doesn't make you lose money. Your psychology does. In his book, Trading in the Zone, Mark Douglas identified the mental traps causing most traders to fail. So in this short video, I have summarized and simplified his most powerful insights to help you think like a trader to start making money. But alright, so let's begin here by taking a look at who was Mark Douglas and why does he matter? Why should you even, watch this video? Well, Mark Douglas was a trader who lost basically everything relatively early in his career. And this was not necessarily due to, bad trading strategies, but more because of his mindset. So instead of quitting trading, he spent years studying why traders fail, and specifically why traders fail emotionally, and also how to fix it. Maybe this sounds familiar to you. Perhaps you had a trading plan, you knew exactly what you were going to do, but for some reason your mind made you either take profit too early, or perhaps selling something that you didn't plan to sell. So psychology is very important. So on this topic, he wrote the book here called Trading in the Zone. This book is like an all-time classic when it comes to trading psychology. It's very popular amongst traders, and that is for a good reason. I don't agree with everything in the book, to be quite honest, but there are some very nice insights in the book too, and that's what I'm gonna focus on in this video. As I said, it's now a must, considered basically a must read on trading psychology. And his work teaches things like thinking in probabilities, controlling emotions, sticking to plans, and in short, he has helped multiple traders win more and make more money by sort of mastering their own minds and take control over their emotions. But right, so now then, what is the sort of core, what is the heart of his teachings and the heart of the book Trading in the Zone? Well, most traders focus on finding the perfect strategy, and don't get me wrong here, this is very important, because in order to win in trading, you need to first of all have a good strategy. But what Douglas discovered was something very critical, that psychology determines success more than strategy, or at least this is what Mark Douglas said. I wouldn't say that psychology is more important, but I definitely agree that it's very important. So here, me and Douglas have a little bit of a different view, but nonetheless, trading psychology is very important. So here, even the best trading systems fail when traders either 1. Let emotions drive their decisions, 2. Can't handle losses mentally. This is very important. You need to be able to handle your losses. This is also very important. The need to be right on every trade. This is something you have to stop. This is a mindset you really have to leave here. Another very key thing is lack of consistent discipline. And Douglas believed that trading is 80% psychology and 20% mechanics. As I already said, I definitely don't agree with this. It's not 80% psychology. But what I definitely do agree with is that even if you have a profitable trading strategy, if your psychology is not in check, your strategy won't matter, because you will make so many mistakes. But all right, so here are the 5 trading truths that every trader must accept. And Douglas taught that successful trading requires a probability-based mindset. And this is one of the principles that I agree with 100%. These 5 fundamental truths form the foundation. First of all, anything can happen. Even perfect setups can lose. So let's say that you have like a perfect trading strategy. Maybe this trading strategy has like a 75% win rate. That is a great win rate. But this still means that you have 25% to lose. So you have 75% to win, but you still have 25% to lose. And if you are extremely unlucky, this 25% can happen multiple times in a row. And this is something you need to accept as a trader. Anything can happen. Another very important thing is that you don't need to predict the market to make money. But what you need to do is that you need to be right most of the time. Or this is actually a simplification, because depending on what risk to reward ratio you are using, you don't even need to be right all the time. If this sounds a little bit complicated, I highly recommend to watch my video on risk management, and I will make sure to link the video up in the corner as well as in the description. The next principle: wins and losses come randomly. Even with a strong edge, this builds upon the previous principle. And here, you might of course wonder, what is an edge? Well, in simple terms, an edge is basically higher odds. It's basically when the probabilities is stacked in your favor, but it still never guarantees a win. Last but not least, every trade is unique, so treat it that way. I can also just mention super quickly here that if you want to dive deeper into what an edge is, and how to build your own trading edge, because this is something you need to make money in trading, I do have a video about that. However, that video is currently only available for channel members, and it's only available for diamond members, but I just want to make that quick shout out. But right, so now you might of course wonder, how will these trading truths help you as a beginner? Well, you stop when accepting these truths, you will stop needing to be right, and you will start thinking in probabilities. This is such an important step. You will also avoid emotional traps like panic selling. You're probably familiar with that feeling. Or another very dangerous one is chasing losses, and also trying to win back what you lost. That is very dangerous. You will also build consistency, which is the #1 goal in trading. As traders, if we want to be consistently profitable, we of course, built in that name is consistency. Here, also very important, focus on the process rather than the outcome. This principle, by the way, can be applied to pretty much all things in life, in my opinion. You want to focus on what's in your control. The only thing you as a trader can control is you can control your trading strategy. You can control your psychology so that you follow your trading strategy, but you can't control if you will win or lose. At the end of the day, it will be some randomness involved. So by following these principles, you will also develop a true mental discipline for long-term success. All right, so here, and this is very important, let's dive a little bit deeper into risk acceptance. So first of all, and this is very important, you only want to risk money you are fully okay losing. And as a rule of thumb, this can be very useful. If a loss really feels painful, if you lose a trade and you're like, this really sucked, I almost can't take it. If that's a feeling you have, then you are probably having a too large position. Your position was too big. So if that happens, you need to limit your risk. And once again, I recommend checking out my video on risk management. Another key principle, you want to accept risk before the trade. So before taking the trade, you really need to accept that this trade can hit my stop loss. And if my stop loss gets hit, I'm totally okay with that because I have already accepted the risk. Another very important thing to think is that, the market is neutral. The market is not, out to get you. The market is not evil. The market is not, trying to fool you. The market is neutral, and we as traders can make money based on the market, or we can lose money. But thinking that the market is rigged will not be helpful. And this leads into taking full responsibility for your results. Don't blame external factors. Don't blame the market. Don't blame anyone else than yourself. And this is a good quote. When you truly accept the risk, you will be at peace with any outcome. But right, so now let's take a look at Mark Douglas' 7 principles of consistency. 7 principles to make you consistently profitable. The first principle, and arguably the most important one, is that you need to know what your edge is. So before you trade, you need to know your strategy, and you need to know, what is your edge? What makes me think that I can make money in the market? Is it some kind of technical analysis setup, or maybe it's some kind of fundamental analysis? It doesn't really matter, but you need to have an edge. 2, you need to define your risk before every trade. So you will need to know, how much can I lose? You can do that by setting a stop loss. And 3, you need to fully accept the risk before entering. I talked about this earlier in the video and why it's so important. 4, you should act on your edge without hesitation. So what I mean by this is that if you know that you have a setup with, let's once again use the 75% win rate example. You know that when I see this setup in the chart, I do have a 75% chance win rate. If you know this, you need to act on every single time you see the setup. You of course need to take it without hesitation. Even if maybe you have a loss streak, maybe with this setup you have a 25% chance or 25% risk to lose. And let's say that this has happened 3 times in a row. You were super unlucky, lost 3 times in a row, even with a 75% win rate. But as long as you know your setup is correct, you still need to take these trades without hesitating. So here, this one leads into this one, and that is that I take profits as the market makes them available. 6, I monitor myself for emotional mistakes. So if you make one of these mistakes we have been talking about in this video, you need to take one step back, and one thing you can do is to write them down, whether you have a notebook or digitally. Write down your mistakes, what happened here, what principle did I break, and so on and so on. And last but not least, stick to the rules without expectation. These rules turn discipline into a habit, and habits are what lead to consistent results. But okay, so I'm seeing that this video is getting pretty long, so I think I will wrap up right here. I do have some more slides that I wanted to cover, but as I said, this video is getting a bit long, so I think I will save the rest of this presentation for our channel members. If you didn't know, we have an amazing community right here on YouTube, and by joining, you will get access to things like exclusive videos. You will get access to multiple full presentations like this one when we take a look at extra material, and at the same time you also support my work. So if you want to join our family here on YouTube, that would be super awesome. And if you don't, one way to show support on these kind of videos is simply by dropping a like. All right, so now you have a good understanding of Mark Douglas trading psychology. So now the next step is to dive deeper into risk management. So I highly recommend to check out this video next. I will see you in that video very soon. Take care. Ciao.